And what will those investors, what will be the key drivers for them? Security, yield, prestige? Like what's really driving their motivation?
Yeah, no, it's a good question. It's a combination. I mean, depending on the investor, whether it's a sovereign wealth fund investor to global pension funds, endowments, foundations. From our experience and from my experience, I would say generally speaking, the largest investors are a little more gravitated because a lot of them are, it may not be, it's not domestic capital. It's not in the US, right? So if it's a sovereign wealth fund from Asia, the Middle East, or Europe, they'll be more focused on the key gateway cities if they're investing in the United States, right? So like in the US, they're less likely to buy a building in, Kansas City versus New York City or San Francisco or Chicago or LA. So I think um, there's a bit of a preference from, if I'm generalizing, from non-US investors to buy in key gateway cities in the US. And that tends to be bigger assets because most of these investors are investing large amounts of capital. They can't invest in small deals. So like, generally speaking, most of these investors, they won't even look at a deal if the equity is less than $100 million. Like that, it's not even, it doesn't make any sense. And they're also 892 investors, which gives them a tax benefit.
What's an
Um,
892 investor?
these are these are applied to sovereign wealth fund investors. So if they invest into real estate and own less than 50%, they basically don't pay any taxes. So it's a huge advantage for some of these international investors to invest in real estate, but not own a majority stake.